Back in the action once again. It's about that time of day again here, folks. Hope you guys had a great day out there. Time to get back to work. It's Thursday evening. It's August the 15th, 2019. My name is Joseph, by the way, and welcome back, as always, to your nightly newsletter. Now, in case you forgot, guys, again, my name is Joseph. My friends call me JJ, and I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. My job tonight is to help you identify the best setups to look for tomorrow, Friday's session, how to avoid the most common traps tomorrow, and how to have the right mindset for the most amount of success on Friday morning. We got a lot to cover in tonight's video. We'll talk about the oil market tonight, S&P, Nasdaq, gold, and of course we'll wrap up tonight on that mighty euro. I'm going to start off on the black gold tonight, the Texas tea, the crude oil futures, because as you probably noticed, crude and a lot of the other markets are bearish, but with a big old range on that chart. Let's grab that oil. Let's dig into oil, see what the plan looks like here first on the oil tomorrow, because as you can see here, and this will be one of many charts here as we go into Friday's trading session, we have a bear market running lower here on the crude oil. That bear market running lower obviously now starts going sideways, right? Double tops, double bottoms, and anytime I see a balanced range-bound market like this, I want to buy low, I want to sell high, and avoid the middle. And one thing you'll notice on this chart is I'm drawing these trend lines, right? Trend line up off these higher highs, trend line down off of those, right, lower lows. This creates kind of that expanding triangle. And you're going to see a lot of these expanding triangles here, right, on tonight's video, because the first three charts we'll talk about tonight have ranges with some expanding triangles here. So, bottom line is it's a trading range. This is a very wide trading range, which we'll dig into a lot more detail here tonight, because a wide range is a very big important clue here, by the way. And of course, a wide trading range tells me I want to buy low, I want to sell high, right? Buy low, sell high, and avoid that middle. And so I'm looking to go up and sell off that high. I want to go down and buy off of that low. And tonight in the video, we'll talk about the most important setups right now to buy off the low, to sell off that high. We'll also talk about what a potential breakout may look like, right? And how to profit on that breakout for the bulls back up to 47, or for the bears back down to that 52 and change, right? So we'll talk about breakouts, but most importantly, we'll talk about how to use these trend lines, this expanding triangle, right, to find some really great setups to buy low and sell high tomorrow morning. Over on the S&P here tonight, though, on the S&P, very similar here to crude oil. Strong move down, of course, in yesterday's trading session. This now settles into what is not the prettiest thing in the world, right? It's a range only a mother could love, I guess you would say. All kidding aside, though, that is a very narrow range, as you'll notice, right? This is a very different type of range. This is a very narrow range, right? Oil was a wide range. And again, we'll go into a lot more detail about why that's important in tonight's video. But again, right, range-bound market, whether it's wide or narrow, range-bound markets tell me I want to buy low as it goes lower, right? I want to buy it as it goes higher. I want to sell it. And again, just like on the oil chart, I've got some triangles here, right? Some expanding triangles I'm watching, and I'm looking for some key setups to buy off that low and of course sell off of that high. There is one very important factor though on this chart, and that is that recent kind of pendulum swing back off of that low. That creates momentum, and anytime we have momentum, we have to be a little bit more patient before we can sell off that high. I'm going to go into a lot more detail on the S&P. If you're an Emini trader like I am, you're going to want to stay tuned. We're going to dig into all the details here on the S&P. Nasdaq, of course, is pretty much the twin here of the S&P. Bear market down into a very narrow range. We saw this range intact in last night's newsletter. And of course, with that trading range, right, I want to buy low, I want to sell high. Again, this is a very narrow range, right? You'll notice very small, very narrow range. That is a very important clue, and we'll talk about why that's important in just a few moments here. And again, much like the previous two charts now, right? I'm drawing my trend lines up off the lows. Again, I'm using those lower lows and higher highs now to create that expanding triangle, and we'll talk about why that's important. We'll talk about these specific entry patterns I'm going to use to sell off this high, the buy patterns off that low, and of course we'll also talk about what a breakout might look like, right? And how to trade that breakout. How do you know when it's time to trade a breakout? How do you know when it's time to fade a breakout? We'll talk about all those details tonight on this video. And then of course, how can we forget about gold? The yellow metal as it goes higher here. Bottom line is we are slightly bullish. I mean, very slightly. Little higher highs here, little higher lows there. We're slightly bullish on this chart right now, but it's almost a range. It's almost a range. You can see there's a range right inside here as well. I've kind of widened out that range a little bit since we spoke last night on the newsletter. But the most important thing right now is it is bullish. We do want to be a buyer, but look at how, right? I mean, just look at how flat this channel is. I mean, it's almost a range, right? And that's a really important clue because there are lots of different types of channels, right? There are steep channels, and steep channels oftentimes are narrow. Steep channels are a very important clue, right? And so are wide, almost flat channels. And we'll talk about why, right, this kind of flat, wide channel here, why that. It's not a bad thing. It just tells us a specific set of rules to follow, and it really makes sure here that we do the things the right way tomorrow. So we'll talk about, right, I want to buy underneath that range. I want to buy the low of that channel. And because this is a wide channel, I'm going to use slightly different types of patterns on that wide channel. We'll talk about that here tonight on the video. And then if we do keep going higher, I've got that measured move overhead. So we'll talk about there's one specific pattern I'm looking for as we go higher here because I don't want to buy into that measured move. So we're going to break it all down in the gold tonight. Obviously, we'll go into a lot more detail on that. And then how about that euro? Well, I'll tell you, the euro continues to move lower here. We talked about that 2-week-long range earlier on this week, and sure enough, right? Sure enough, this dollar keeps getting propped back up, right? And this euro comes crashing back down. We know we're bearish on the euro right now, but I'll tell you right now, there's one big clue on this chart, and that is 1, 2, and 3 measured legs down. Now, if you are an experienced visitor to my nightly newsletter, you know that we talk about what's called the rule of 3 quite a bit on this newsletter. So that rule of 3 tells me one very important clue here. And because of that, I'm honestly thinking about being a buyer off of this low, right? We'll talk about a specific pattern to look for to call that reversal, hint, hint, right? To call that reversal. I'm also anticipating a bit of a range down here. We know we're bearish, so I want to be a seller. And so we'll talk about some key setups to look for to be a seller. And then, I don't know, this afternoon we heard some big news out of one of the Fed speakers who pretty much guaranteed a rate hike, a rate cut, later on in the year. And so that rate cut's not going to be good for the dollar. It's going to be pretty bullish for the euro. So I am ready here for potentially a short covering rally going higher. The problem is I've got to be very careful, right, in how I buy that market. So we'll talk about what it looks like for a bull rally here tomorrow and the best ways to profit from that here on tonight's video. So we have a lot to cover here. 3 legs down on the euro, a wide channel on the gold, Nasdaq, S&P, and oil all have those expanding triangles. We have a lot of good stuff to dive into tonight. But before we jump into the video here this evening, I just want to remind you, before I publish this video on our YouTube channel, I always send off an email to everybody on our mailing list, and I want to make sure that you get that email. That way you know exactly when our nightly newsletter goes live, and that way you never miss another great opportunity to earn some profit right in the back of this strategy. So to make sure you always get that email, join our mailing list. It's very easy. If you're on the YouTube channel right now, in the description of this YouTube video, you'll find all the links to come over here to the blog at sidewaysmarkets.com. And all I need is your name a real email address, and then hit that subscribe now button. And don't forget, guys, when you subscribe, when you join the mailing list, your job is not over yet. I'm going to send you a welcome email, and that welcome email will have two important things in there. One is a verification link to verify that I have the right email address, and two, there will be a lot of great free resources in there so you can get the most out of our time together on the newsletter. So all I need is your name, your email address. Hit that subscribe now button, join the mailing list, and then again, check your email, and sometimes that welcome email gets stuck in your spam filter. And then before we jump in here tonight, I need your help. I'm always trying to make this newsletter the very best place to learn and earn, and I'm always asking for your feedback. So here's what I need from you guys this afternoon. Down in the comments section below, what's the best part about this newsletter? What do you want to see me do more of every evening? What's the worst part of this newsletter? What would you do to change things for the better? If you were in control of everything that goes into this video every night, what would you do more of? What would you do less of? Because I'm always listening. How can I make this newsletter a little bit more impactful, a little bit more valuable for you? Drop me a comment in the comment section below. What's the most important part for you about this newsletter? What part do you wish I would stop doing, right? Whatever it is, I want to know your feedback. Drop those comments in the comment section below. And while you're down there, right, give me that great feedback. Hit that thumbs up button, guys, because it always helps to expose this video to more traders whenever you hit that thumbs up button. So help me out for a moment. If you tune in every evening on this nightly newsletter, hit that thumbs up button for me, because I'll tell you, it really goes a long way to help me expose these videos to other people who are dying to learn this strategy as well. I know the strategy has helped you a lot, right, in your trading, right? Let's share the knowledge, right? Hit that thumbs up button, right, and help me get more people on this video every evening. And of course, as always, right, don't forget, you can always call that toll-free phone number if you have any questions. Now, I'm going to date myself here real quickly, but I actually talk on the telephone. I know it sounds crazy, kids, right? Back in the old days, you know, back when there weren't cell phones, we used to actually talk to each other on the telephone. So believe it or not, you call that toll-free phone number up there. I'm going to answer my office phone, answer all your questions. Maybe you have questions tonight about the best brokers, data feeds, charting software, or maybe you want to get more information about how to join our free trading course or our free pass to our trade room. Don't be afraid. Call that toll-free phone number, right? I'm not that scary of a guy. I'm a pretty nice guy. I look forward to answering that phone call, answering all your questions, and helping you get the information that you need to save time and make some money in this great business. So call that toll-free phone number, hit that thumbs up button, drop me some feedback in the comments section, and in the meantime, right, let's get this party rolling forward here tonight. Introduction is out of the way. Let's jump into our calendar here for tomorrow. Tomorrow is Friday the 16th. Tomorrow is a summertime Friday. So anytime we have a summertime Friday, you know what I always say, right? Early in, early out. And I'll be very honest with you, out of all of the days of the week, the day that I always have the hardest time stopping trading is on Friday morning. You got to have a good reason to be trading on Friday after 11:15, 11:30. I always start looking for that cutoff around 11 o'clock Eastern time. If I'm not seeing good personality after 11 o'clock Eastern time, I'm going to close up shop and hit the weekend. Well, I'll close up shop and then do our weekly routine, our weekly ritual, which of course we'll do together tomorrow morning, right after we finish up with our trading schedule. So early in, early out tomorrow, summertime Friday. Don't push it too late in the day tomorrow, because remember, professionals will leave the markets early on a Friday, and then you're left with low volume, unreliable, unpredictable price action. Much better to trade a half day tomorrow, come back next Monday, you'll full session next week, right, on Monday morning. So bottom line is early in, early out for tomorrow. What else do we have here on the schedule for tomorrow? Housing starts at 8:30 Eastern time, and then we also have a bunch of consumer sentiment numbers coming out at 10 a.m. as well. You know, I don't really think that housing number at 8:30 is going to be too big of a catalyst tomorrow. If I had to guess tomorrow, I would guess that 10 o'clock top of the hour is probably where you're going to see the most reliable big moves for the session tomorrow morning. So hopefully I'm wrong. Hopefully that housing starts number really lights this fuse well for us tomorrow at 8:30 Eastern time. It's a summertime Friday, right? Remember, it's a summer Friday tomorrow, so volume will be a little bit lower. The personality will be a little more, muted. It's not going to be that, well, usually it isn't, right? Again, hopefully I'm wrong tomorrow. Hopefully I look like a buffoon, right, for talking about, having some trouble price action tomorrow. Hopefully I'm wrong on that. But typically on a summertime Friday, it's not going to be as perky. It's not going to be as volatile. It's going to be a little bit more subdued, which is fine by me. Just be patient, right? Just be patient on a summertime Friday. 8:30 major news, consumer sentiment at 10 o'clock. We open up our trade room every morning at 8 o'clock Eastern time. And of course, we'll have a front row seat for that housing starts number at 8:30. So now we know what the plan is for tomorrow, early in, early out. Now let's grab some charts here and let's get this plan put together. Now, first of all, we know we have a range-bound market right now. That trading range has a bear bias to it. And, I should also back up here for a moment. I almost forgot here. We are watching rollover for tomorrow as well. As of right now, crude oil, if you could zoom in on this a little bit here, right now, you've got that CL919 number with 500 and change, right? The 1019 number right below it, that's got, 350,000 contracts. I do expect tomorrow we're going to make that shift over to the 1019 contract. But as of right now, there's no real guarantee that's going to happen. Right now, we are currently trading the 919 contract. As soon as that 1019 contract has more volume, and it could easily be in the overnight Asian session here, we will make the move over to that 1019 contract and trade that 1019 contract. So keep it in mind for tomorrow. And remember, guys, we're not talking about contract expiration here. We're talking about rollover, which is not something you should be worried about, right? It's a relatively simple idea. Once the volume rolls to that 1019, right, then we'll trade that 1019 contract. So now that we know, kind of look for that rollover tomorrow, bear market into this trading range. Now, a couple things you want to be aware of this. First of all, a bear market, right? The fact that we're bearish tells me the odds are much better for me to be a seller than to be a buyer tomorrow. And so that will greatly determine the type of entry patterns that I take on this, right? I can be a lot more aggressive selling off that high because of the overall bearishness. Because it's overall bear, if we go lower, I've got to be a little bit more conservative, a little bit more patient on my entries going higher, because again, I just simply don't want to go against that trend too aggressively. Now, with that, we also have the big clue here, which is a very wide range. Now, wide ranges are, and we have the benefit tonight of having comparisons in a wide range on crude and a narrow range on the S&P and the Nasdaq. Anytime we have a wide trading range, we usually don't get that big of breakouts. You'll notice I've got my battle zone above and my battle zone below. They're relatively close to the trading range. And you'll notice on the next charts we look at tonight, those battle zones, those buy and sell zones will be a lot further away on a narrow range. And the reason for this is because this range is so wide, there's plenty of space for somebody to come in and buy off that low. I can get, right, even if I'm just below that range, I can still get a good risk-reward ratio if I'm just barely outside that range. I don't want to be in the range. I want to be just outside that range, right? Because a range-bound market says we're balanced, we want to buy low, we want to sell high. So what you want to remember is when it's a wide range, stay away from the middle, right? As always, anytime we have a range, stay away from the middle. It's always a little bit tricky to avoid the middle when the range is really wide, because it's just, as you can see right now, we're sitting right in that middle, and it's very common for a wide range market to spend a good amount of time inside that middle. The key is going to be to get outside that range, right? Buy it back up outside that range and sell it back down. And again, on a wide range, you're not going to need as big, right? You won't need as big of a breakout for you to be able to get a good risk-reward ratio. right? So I want to remember that too. Risk reward ratio, we talked about last night, the 3 rules for a winning trade, right? 1 was going with momentum, 2 was including the level of support and resistance, and 3 was making sure that we have a good amount of reward for the amount of risk we have to take on that trade. Wide ranges make good risk reward ratios a lot easier, and therefore you don't necessarily need to get as big of a breakout. Now I mentioned this earlier, we have kind of these expanding triangles here right now, right? The one at the lows looks great. The one at the top here looks pretty good too. This is obviously support and resistance we can use on this, right? Buying low and selling high. So expanding triangles are a very, very big clue in tonight's newsletter. So let's talk about how do we buy low? How do we sell high? We know we're bearish right now. We know we want to be a seller. I get my buy zone above, below, my sell zone above. As we go higher, right? What I want to do is I want to see this market get out of that range. I want that moving average now to come up, and I want those buyers now to try to buy that pullback. You know, we saw an example of this earlier on in the session, right? Price jumps above the range. The buyers, of course, sort of buy the pullback off the moving average. The buyers commit off the moving average, and look what happens. It sinks right back down to retest the low. We are ultimately looking for that same basic pattern over on the right-hand side now. I want to see, again, I want to sell high, I want to buy low, I want to avoid the middle here, I want to go up, try to get outside that range now. What I'm really trying to do is I'm trying to get these buyers to commit to buying that pullback. It's not a bull market. It's not even a trending market. It's a balanced range-bound market. And we know whenever a market starts off as a range, we know that buyers will try to buy that breakout pullback, and I'll be sitting right there to sell right back into that range as we go. Now, that's the best pattern to sell, right? I want to go up, let these buyers try to buy that pullback, and literally sell right into their failure, right? I call it a failure setup. It's a range. It's called a 2-try failure pattern. Now, what if the market runs lower though? If it runs lower, you've got to remember this is overall a bear market. So instead of just trying to look for that same pattern, right? That pattern, the lows, would be seller failure, and then we're buying back up, right? Now, that may work tomorrow, but usually the better pattern when you're going against momentum is to let them try a couple times. Once, twice, and then I'll start looking to be a buyer. And this is what I mean when I said I want to be a little more conservative, right? Being a buyer. A little bit more patient, because as we go lower, that moving average comes over, sellers are already in control. So when they try once and they fail, they'll probably try one more time. And a lot of times that second try is what finally breaks free of that trading range. What I'm looking for is I want to see sellers try once, try twice. That will now tell me that all the sellers are committed, and if they fail, now I can buy back up. Now, this is a very similar pattern to that failure pattern we saw earlier, but this one's called a nested failure pattern. It's a great pattern for counter trend trades in a range-bound market. So we're buying low, we're selling high, and we're avoiding that middle. Now, what would a breakout look like? What's a breakout look like in a trending market? Breakouts have 3 legs to them. 1, 2, 3. You got to remember, as we go higher here, buyers will try to come in. This pullback is not going to be very reliable. That pullback will usually fail, and we'll sit back into that range again. That's why I'm looking for failure patterns. But if they can hold that pullback, and we can get some excitement, right? A jump off that moving average, right? Again, they tried here, didn't get it. Tried here, didn't get it. If they can get that pullback to hold, and we get some personality now, some momentum going off those highs, now what I'll do is I'll mark up that high right there. I'll mark up those highs. That creates the high of a channel, and then bring that channel down, and that's going to be right off that major low down there. That will create the sweet spot, And now we're looking to buy that pullback from there. Now, obviously, if the buyers can take control of this, they're going to be trying to go back up and retest those highs. Not from yesterday, but just before that, right? Just before that. What was that? Tuesday morning, right? So we know that Tuesday high at 47 will be in play if these buyers can take control. The same pattern goes on to the downside, right? 1, 2, 3. Again, got to see a strong move down. If those sellers, if they can't hold it, try once, try twice, we're going right back up into that range. And I will be first looking to buy this market before I'm trying to sell it. Now, 1, strong move down. 2, pull back to the moving average. 3, jumping off the moving average. 1, 2, and 3. Now what do? Mark up that low. Mark up that low. Mark up the big high. You got it. And now we know where our sweet spot is, and we're selling off again, it's the low of that first leg with the high of that hidden channel. Where's my target on that one now? We get a nice big juicy target now waiting down at that 51.94 area. I'll tell you though, this could easily, maybe not tomorrow, right? But we may get this move going back down towards that big low, just above that $50 big round number. Probably not going to be all the way down to 50 tomorrow. It could, but that will be a pretty remarkable run for a summertime Friday. We're more likely just to get down to that prior swing down around the 52s there, right, for tomorrow. So that's the overall plan. Buy low, sell high, and again, because that range is so wide, we don't need that big of a breakout because again, right, that expanding triangle, we're going to keep our eyes on that, right, buying low and selling high. So, real quick, I've talked about a lot of different patterns up to this point, right? Failure patterns, pullback patterns, nested failure patterns, breakout setups, right? I have so much more that I want to share with you, but I've got to keep going. We're almost 30 minutes in this video right now, and I've got more I want to talk about so you guys are ready for tomorrow. So here's what I will do. If you want to get a deeper dive into the entire trading strategy, I'm going to put a link up here in the upper right-hand corner for our free trading course. You're going to love this free course because not only will it give you more information so you can get the most out of this newsletter every evening, but you'll learn my 3-step trading strategy, my 4 favorite entry patterns, and you'll see hundreds of examples of how we use this strategy on our favorite futures markets. So don't delay, pause the video. I'll be here when you come back. Grab that link that just popped up in the upper right-hand corner and register for our free trading course. I'm also going to put a link right below the video tonight. I'll put it on our blog. I'll put it in the information section, right, of this video on YouTube. So go into that information section, right, or below the video on the blog and grab that link and get started with that free trading course. In the meantime, though, let's keep moving because time is money. Let's grab some S&P here next. Now, the S&P is very, very similar here, right, to the oil. There's one big difference though, and that is this is a skinny, narrow range, right? Apparently this range, right? Apparently they've been cutting calories, right, on this trading range, right? Not a very well-fed range here by any means. Very skinny, very narrow trading range. We still have that bear bias to it. We still know we want to be a seller, right, more than we want to be a buyer. But what's the big difference here, though? The big difference is the size of that range. Now, think of it this way. When we had a wide range, when the range was wide, we talked about how a wide range, I don't need a very big breakout because in a wide range, I can still take a relatively small amount of risk for a big reward. In a wide range, I can be, somewhat aggressive down around those lows because I can still risk small to earn large. But compare that to a very narrow range, and now you can see the difference, right? In a narrow range environment, now if I'm just barely outside that range now, see, now that is not the same anymore, right? Now I can't really get a small risk with a comparable big reward. I can still get a small risk. But remember, like I said last night on the newsletter with those 3 rules for a winning trade, you want to make sure you've got potential for a 2-to-1 or a 3-to-1 because that's going to give you the best bang for the buck. Because trades like this, professional traders are not going to get excited about that trade. right? They won't get out of bed for that trade early, right? But if we can get a nice big run, nice big breakdown, get that failure pattern, right? Yeah, now we can get a nice, again, still risk small, but now the reward is so much better, right? People will stay up all night to get that trade, right? And that's why those trades are more reliable. So the moral of the story is when I have a narrow trading range, I've got to get further outside that range than when we have a really wide range. And so when I have this narrow trading range, you'll notice I use a much larger range expansion, right? Expansions below and expansions above. You'll notice it's a lot wider, right, range expansion. So tomorrow morning, the biggest challenge here on the Emini, and it's also going to be almost identical on that Nasdaq, is going to be staying away from this range. In fact, today in our trade room, we found a number of examples of patterns that set up inside the range. We kept skipping them, and of course, every one of them kept failing. The problem with trading inside that range, or even within, right, even barely inside or outside of it, right, even small breakouts are not going to be very reliable because there simply isn't a lot of profit incentive, right, to offset the risk. So with that said, we want to get that deeper pullback going down, right? So let's say, for example, now again, we know we're bearish, okay? We know we're bearish right now. So as we go higher here, right, how do we sell this thing back down again? We want to go up. We do have a very strong move going higher here right now, right? Nice strong pendulum swing now going higher. And that's also a very big clue because as we go higher here, right, what's going to happen? This is going to be a very strong bull market as it runs up into that battle zone. Not only do we have to get a further distance away from the range, but you'll notice we're starting the move from way down below the range, right? We're not starting inside the range here and then going up. Because if that was to happen, right, if we were to sit here sideways, for example, here's one example, right? If we were to sit here sideways right now, let's say the next couple hours, right, we sit and go sideways, that will absorb this momentum. So then all now is let's go up, get those buyers now to try to buy the pullback, and then we'll sell into their failure. However, if this market just keeps on running, right, if it just keeps on going, now what do we have now? Momentum. And momentum tells me what? We're still a range. We haven't broken free of this range yet because we need that 1, 2, 3 breakout, right? At this point now, because that momentum is so strong, you can bet a lot of buyers are going to be trying with 1, 2 before they let this thing collapse back down to retest that low again. So real quick, to sell off this high, if we go sideways here, right? One scenario is we start going sideways, we absorb this recent bullish momentum. Then we go shooting up. Buyers come out, they try to buy that pullback. We call this a 2-try failure, 1 try, 2 try, and we know where their stops are. We're going to sell right into those stops tomorrow morning. Now, knowing that if it doesn't stop in the range, if it keeps running higher here, at that point, momentum is far too strong just to try to sell it. So what I'll do is I'll wait for the buyers to try once, wait for them to try twice. Now, look how I draw this. You're going to want these to be lower lows, right? Because remember, buyers want to buy low. Sellers want to sell high. Buyers want to buy low. So when we see those lower lows, buyers try once, buyers try twice. Now we know all the aggressive buyers are in, the conservative buyers are in, and now we know as soon as we get a nice big red candle here, that's going to be enough to spook all those buyers. The buyers will get the heck out of that position, and the market will collapse, right, as buyers exit their trades. So that's going to be what we call a nested failure pattern. Okay, so again, those are the two scenarios to watch for to sell off that high. Now, what if this market jumps up? When does it become a breakout? When it holds the next pullback, right? So it jumps up and it holds that pullback. Okay, don't be foolish and try buying that first pullback. So you know what's going to happen? Because you bought it, it'll go 1, it'll go 2, and collapse right back down. And I'm telling you, right, if you don't trade it, it'll jump You know what I'm talking about. It's almost like the markets know what we're doing, isn't it? It's spooky like that sometimes, and it's what drives new traders crazy. Because you're like, okay, I'm going to buy that pullback, and sure enough, the one that you buy, what happens? It fails and collapses back down in. But because you don't buy it, you know what's going to happen. It's going to jump off that moving average as if the market kind of sees in your office, right? Now, if we get that jump off the moving average, now we know we're bullish, right? So now we mark up the high, mark up that high, mark up that low. There's your sweet spot. This is obviously not drawing a scale here, but that's the overall idea, right, of how a 1, 2, 3 breakout works, right? 1, 2, 3 breakout, buy the low of that hidden channel. And again, guys, I'm simply drawing up some ideas for tomorrow, but when you register for that free trading course in the upper right-hand corner, that free class I mentioned earlier, you'll also get sent hundreds of examples of how we apply things like this 1, 2, 3 breakout on our favorite futures markets. So definitely grab that before tonight's video is over. And then, of course, as we go lower here, right, if we do run lower here now, we're already bearish, okay? So if I'm going to be a buyer off this low, I'm going to want to see that 1, that 2, and again, look how I draw this, guys, right? It's a 1, it's a 2, right? It's a nested. Again, because we are bearish already, right? Because we are bearish already, it's important that we let those sellers try once, higher high, try twice, and then once we get a nice signal candle on that, all of those sellers will bail on this. Because again, it's not a trending market. It's a range-bound market. One of the things we talk about in that free trading class is the fact that, right, it is a, right, it's a balanced market. You want to buy low and sell high. It's not a trending market. If it does hold that pullback and run, well, great. Good for you, sellers. Now you've got control. Mark up that low, mark up that low, mark up that high, and now we know where we're trying to sell off of for that sell going lower. A very easy strategy, as you can see. But remember, tomorrow morning, get with us in the trade room because I'll tell you, the strategy is very simple. What's not so simple, though, is applying it to a moving market, right? Sometimes the markets don't move as fast as we want them to, and we have to stay patient. Next up here, over on the Nasdaq. Now, Nasdaq is almost a carbon copy of the S&Ps. This won't take me that long here on this one. It's a bear market. It's a very narrow trading range. What does a narrow range tell me? A narrow range reminds me I need to get a big breakout, buy low, big breakout, sell high, right? Because again, it's all about getting as far as I can outside of that range without the 1, 2, 3 breakout, of course, but get as far outside that range so I can get a much better risk-reward ratio. Right? Traders will be looking forward to, right, buying low when it's low enough to give them a small amount of risk with a big amount of reward. So again, I'm going to use that trading range. And that trading range will help me define now where my sell zone is, where my buy zone is. And again, sorry about that. And again, right, as we go higher here right now, if this market, you'll notice here, we're coming off of a relatively deep pullback, a relatively deep breakout there. If we do continue here just to keep running, right, if this market runs higher here now, that will be a very bullish short-term momentum. Now, remember, we're not a trending market here yet until they hold the pullback. But that momentum going higher here, though, right, if it doesn't get stuck inside this range here, right? If we just run higher here right now, it's not a breakout yet, but it's sure as heck is close. And so with that, you know you're going to get a lot of buyers here, right? The buyers will try once, they'll try twice. Again, buyers want to buy low. That's why you want those lower lows. And then we look for that run going back down into that trading range. Or maybe they get the 1, 2, 3. Mark up that high, mark up that high, mark up that low, right? And there is your, right? There's your, again, 1, 2, 3 breakout into a hidden channel pullback. Where's your target on this? Where's your target? Yep, your target is, of course, back up. to those highs from earlier on in this week. Now, one thing I forgot to mention on the S&P chart that I will mention on this chart is if we do see a short covering rally, we had that big move down from yesterday, right? So big moves down like that, remember that came on the back of the Chinese, right? The US-China headlines that's been basically peppering these markets all week this week. If we continue to see more, right? If we continue to hear overnight headlines here, if this market runs, right? So we talk about the 1, 2, 3 breakout to be a buyer. If we see this thing really start to run as it goes higher, right? It feels like everybody's piling on. I can buy that breakout, but again, it's going to be very, very strong. And what you want is you want that 1, that 2, we call this a 2-try breakout pattern. I should have mentioned this earlier on the S&P as well because this will apply to the S&P as well. Again, now in this one, you've got to get a very strong move up. Once you get that strong move up, the initial short move here, the initial pullback will actually not be sellers. It'll be buyers taking profit. It's the second pullback that you see. That will be the short sellers getting in, trying to sell back down into that trading range. Once I see those bears try twice here, first one's the profit-taking buyers, second one is the actual short sellers. Now I know where the pain point is. Right? Now I know where the sellers start to experience the pain of that loss, and I'll buy right into that failure. Right? Same thing goes to the downside. Now, if we roll lower here, again, it's an overall bear market. So as we roll lower, stay away from that middle, right? Stay away from those middles. You don't want anything to do in that middle. That will usually come right back down again, right? You don't want to trade those middles. You want to get outside that range, get that moving average coming over, right? And again, as I mentioned earlier, because we're bearish, you want that 1, that 2, get that higher high, right? Because sellers, they want to sell high. Once we see those higher highs, right? Once we see those bears trying twice, now it can be a buyer going back up into that trading range. And again, remember, if we sit inside the range here for a while, then we can go up 1 try, 2 try, 1 try, 2 try for the buyers and sell back down again. But if we just run, that's where you need to look for that nested 1, 2, and then back down from there. It's all about the market's momentum. Even though it's a range-bound market, buy low, sell high, avoid the middle, short-term momentum is a very, very big important part of this. So make sure we trade that accordingly here tomorrow. And again, buyers, and we're trying to go, sellers here, if we get a big breakout going lower here for the bears, next level of support is at that, 72.24, 72.24 and a half down there. That will be where our next big objective is. Of course, if we can get that successful 1, 2, 3 breakout, we'll look for that hidden channel pullback and we'll sell it down from there. So that's the basic plan on the Nasdaq tomorrow. Again, the strategy is very simple, but doing it with me tomorrow will really be a great edge for you. That way you always know you're doing it the right way every single time. Let's keep going. How about some gold right now? So gold is a couple things here. First of all, we're bullish. We definitely can see that. There's no doubt about that. We're definitely not bearish, that's for sure. We get some higher highs, we get some higher lows here. So we're definitely bullish right now. But I mentioned in the introduction here this evening, that we're almost flat. I mean, we're almost flat, right? I mean, we have literally, this could be, that could be a range right there too. I've got this as a flat range right there. But again, you can see though, we're getting higher lows, we're getting higher highs. It's a slight bullish bias to it, which is obviously important, right? It's important because knowing that the bulls had that slight edge to it, we know we have a bullish bias into that trading range. So every time the market goes below the range, looking for a failure and buying it back up. Goes below the range, look for the failure, buy it back up. Right? Same pattern over and over and over again. So there's no need to reinvent the wheel for this, right? I want to look for that pullback down to that low. I want to get that moving average coming over. I want to see those bears try to sell off that moving average pullback like we saw here, right? And hopefully we'll get another one tomorrow and we can run this puppy back down to retest that low. This is a range. Again, I'll call it a range right now because in all honesty, you want to be thinking about trading it as a range, which means buying as low as you can and selling as high as you can. You want to stay out of the middle of that range, right? That will always be the trickiest part about this. Now, how do we sell off this high? Very carefully at this point. And I say that half jokingly, but the problem with being a seller on this market right now is it's going to be, at least what I can see right now, it's going to be tricky to get short here without selling inside the range. So here's what we're going to use. If you look back in time, right, there's a pattern earlier in today's session. It goes up, the buyers try once, the buyers try twice, and there's a trap high there. Okay, we call this a crown reversal pattern, but this is basically a nested failure pattern with a trap high on this. Now, traps are my favorite weapon, my preferred weapon for avoiding ranges or avoiding buying high or avoiding selling low. So let's zoom in on this a little bit quickly here. And as we pull back right now, right, we go up, the buyers have tried once, the buyers have tried twice, a trap high on this. Right? A trap high. Again, this is the same idea, right? We're bullish. So for me to be a seller, I've got to respect the bullish momentum, let the buyers try twice, again, make them buy lower, which we already have right now. But here's the problem. If I sell, right? If I take this and I just do something like this, right? If I just wait for this to be a buyer twice now and I sell here now, right? I'm now selling right into where? Into that trading range. That's not a good spot to be selling, guys. It's not a good spot for anything in a range-bound market. So in order to avoid that problem, what I'll do is I'll wait for that trap high. Traps are almost a guarantee when you have them in the right spot like this. Almost a guarantee when you see that trap high and that strong reaction, nice strong signal candle, right? As long as that candle keeps you out of that range, that'd be a great looking setup here in the short term to fade off those highs. Now, what if we go higher here? If we do go higher now, this is where things get tricky because again, we have that measured move up there. That's major resistance. We also have that 46.2 level. That's a major high. So we've got a lot of resistance areas overhead. Here's a couple things you want to think of as the market goes higher here tomorrow, if it goes higher here tomorrow. And that is, first of all, a strong move up. If we see a very strong move up, now we can use that two-try breakout with a trap. So again, bears try once, bears try twice, trap low, right? Trap low. Makes sense? Why the trap? Again, I want the bears, first try for the bears is actually profit taking from the buyers. Second try for the bears is the actual short sellers getting into those positions. I again have concern about all this resistance here overhead. And what's the most effective way to avoid buying into overhead resistance? A trap low. The key here though, remember the key is strong move up. Strong move up. Now, sometimes that strong move up goes right to the measured move. And if that's the case, we almost always see a deep pullback. Sellers will come in, try to sell it, and a failure for a retest of the high. Okay, so if this market just slams higher here and runs right into that measured move, we don't want to buy into that resistance. We want to buy low. And most of the time, right, when we get a measured move hit on strength, we'll usually have that moving average come up. The bulls will take their profit. The price will pull back. The sellers will think this market's reversing now. They'll try to sell off that moving average, right? It's not bearish though, right? It's bullish. So as long as those sellers try, I now know exactly what their stops are, and I can use those stop losses to fuel that run back up to retest that measured move. All right, guys? So don't chase after it if it runs back up to that measured move. If it runs, it's the 1, it's the 2, the trap low, because again, you don't want to buy into that measured move resistance. If it, right, let's say for example, it just jumps up, usually that market will pull back, fail, and do it again. Watch that failure pattern. It may also go up and go sideways too. You know, that is also very common. We run up, we start going sideways. In this case, it's a bull market into a range. What do? We look to buy low. And how do we do that? with a seller failure. Let the market pull back, get that moving average coming over. Sellers will try to sell off that pullback. You know what I'm talking about, right? That failure pattern back up into that trading range again. So we've got a lot to look forward to if this market runs higher, but the one thing we don't want to do is buy too close to that high. So again, we're buying low, right? Get that moving average over, seller failure, and again, stay out of that range, right? Stay out of the range. Get in before you go back into that trading range, because it'll be a whole lot easier for you as long as you're buying outside the range, selling outside the range. And again, right now, because the market is so bullish, it's a lot easier to be a buyer off the low than it is to be a seller off the high. So be careful being that seller off the high here. Wait to make sure that you've got the right entry signal. Last but not least here, over on the euro. Euro is clearly bearish right now. There is no doubt about that. What I do have some doubts about, though, is how much further this market will go. Because as you can see, we are 1, we are 2, and we are 3 big legs down. Now, I'll be honest with you guys. A lot of times we'll see small legs, 1, 2, 3, 4, 5, even 6 legs down. So if these were very small legs, then I wouldn't be saying this right now. But these are pretty big legs, right? These are pretty big legs. I mean, heck, they basically took up the whole entire day today. So these are not your little shrimpy little legs, right? These are big monster legs, which basically tells me we're going to probably go sideways here tomorrow. Now, I'm kind of making an educated guess on this, where the range is right now, but I'll be very honest with you guys. I don't know exactly where that range is yet. But as soon as I do know, then I'm going to go out and, just like on the oil, the S&P, and the Nasdaq, once I know where that range is, I can find my buy zone, I can find my sell zone, and then that will set the table for the entries and exits for us, okay? So just for example, let's just assume for a moment here, this is the range. If this is the range we're in, and again, I don't know enough about it yet, it may not be exactly this range. We may need to update this tomorrow morning when we open up our trade room. But the bottom line is, if we run lower, it's a bear market. The best way to buy in a bear market is going to be a nested failure. But this is so bearish right now. Not to mention, there are fundamental reasons why this market's going lower right now. As I've said for a while now, there's a lot of both fundamentals and technicals that are kind of in confluence. They're lining up together right now. And we don't get that very often in the markets anymore. So there's a lot of reasons why sellers have an edge right now, not just because the chart says so, but because of that strong dollar, right? That strong US dollar, right? What President Trump in the United States has been bitching about, right, to the Fed, right? Cut these rates, get this dollar lower, right? That's what he's talking about. And so because that dollar is strong right now, it is pushing that euro lower. Now, so how do we do this? Well, we know about the nested, but there's one better pattern than nested, and it's called a crown reversal. And it looks just like the nested, but it's got one more wrinkle to it. So again, this is on one big assumption. The assumption is we go sideways here. Okay, there's one very important assumption on this, and that is we go sideways. The only way I will think about calling a bottom on this market is if you continue to see this market go sideways, because that will absorb this momentum. Now, how do we buy off that low? Strong move down. Remember, it's a reversal here, right? It's a counter trend move. So you want to let them try once, but more importantly, try twice, and then get that trap low, right? That trap low is going to be essential on this, because again, that momentum, you've got to get into the habit of respecting the short-term momentum. I'll tell you right now, I didn't learn this very early in my career, right? I would look at a range and say buy low, sell high, and I didn't respect the short-term momentum. This is an example, this crown reversal. Right? The bears try once, the bears try twice. This crown reversal is a great example of me respecting the market's momentum, right? We almost saw it earlier here, right? Strong move down, one try, two try. That would be a crown right there, right? That would be the reversal right there. Didn't get it. Same thing here, right? Back here. Strong move down, right? 1, 2, didn't get it. So you can see, you're going to see a couple of these. You'll see them, but they may not trigger. right? Couple examples there previously on that euro. So again, right, we'll look for it. If we get it, we get it. If we don't, then another leg down, and we'll keep on trying to sell the top of this channel, right? If this thing keeps on running lower here, if it runs lower here again, right, again, we don't get that channel. At that point now, running lower, looking for sells right off the top, right, of that channel, and it will be at that point now a fourth leg down. And I'll tell you right now, 4 legs down are almost bulletproof, especially these big legs, right? So I won't be surprised if it goes 4 legs down. I mean, a little bit, because these legs are so big, right? These are big, big legs. And usually when you see big monster legs like this, usually it's 3, maybe a little bit through that 3 and then right back up again. But if we go 4 legs down, no way, no way. I've seen so many examples where the market makes 4 legs down and it looks like it's never going to stop. It tries to run through it and it just slingshots right back in the opposite direction. So if we do get 4 legs down tomorrow, look for that, right? Look for that crown reversal again. But again, right, I'm not going to look for that here until we get that trading range, right? Because it's too much bearishness right now. So again, we go sideways here on it. Then I can look for the crown reversal, back up into that range. If they keep running on it, right? If they keep running on it now, I'm looking to sell off that high down to that 4th measured move. Then we can look for, right, that nested, that crown reversal, right, back up. And again, we'll be together tomorrow morning in our trade room and we'll break all this down for us here. Now, one more thing here. Kind of clean this up a little bit here for us right now, because we don't know enough about that yet, right? If we do go sideways here, obviously, right, if we go sideways here right now, it's up 1 try, it's up 2 tries. Let those buyers try to buy the breakout. Let them try to buy it, buy that pullback, and we'll sell right into that failure. All right, guys, don't forget, if they hold it, 1, 2, 3, right? 1, 2, 3, what is that? That's a reversal. Could easily happen tomorrow. A reversal is, you know, and again, I think a reversal will come at some point on some headline. You know, some Fed speaker will say something, the dollar will collapse, and the euro will jump off it. We just simply haven't heard that headline yet. Today, I think it was 3:30 this afternoon, 4 o'clock this afternoon, we heard from, I believe it was Fed's Bullard, who pretty much, I mean, the way he talked about interest rates, it sounded like they had already voted on cutting rates. So if they do cut rates on that next on the next Fed meeting, that will bring that dollar down, and by nature the euro, right, will respond bullishly because of it. But again, we're not there yet. We're not there yet, right? I can't buy this market until I get that buy signal right now. All right, guys. So again, we're 3 legs down. I'm not too keen on selling here. I am very keen though on going up. Buyers try and fail and sell back down. I like that one. I love the buy off the low. Hopefully we'll get that reversal, but don't hold your breath again, guys, right? Don't hold your breath for that reversal. And again, if we roll over here, look for that 4th leg down, and we'll find ourselves from there. So there's definitely a little bit more to go here on the euro before we can really sink our teeth into this thing and really figure out what our plan is for tomorrow. But again, we're bearish, trying to be a seller here on that euro. So euro, gold, Nasdaq, S&P, crude oil, we are locked and loaded for tomorrow morning's session. And man, oh man, we've had a great week so far, not only in our trade room, but here in the nightly newsletter. I keep getting such great feedback about that free trading class from you guys. So I'm glad you guys are all loving the free course. Don't forget, if you haven't registered yet for that free course, it's right there, right to the left of my ugly mug. Grab that free trial, that big red button on the website. And again, I'll put all the links in the description of this YouTube video. Don't forget, that free trial comes with your free trading class, your free pass to our trade room, as well as hundreds of examples of how we apply this strategy to our favorite futures markets. And don't forget, if you want to take the plunge and come do it with me tomorrow morning, like I mentioned earlier, the strategy is very, very simple. But what's not so easy, especially when you're a new trader, is going out there and applying it on your own. When emotions are involved, fear and greed can really make trading difficult when you're brand new. So to make it easier on you, I come out every morning, 8 o'clock Eastern time, and we execute the plan together. We start off with a morning ritual. We trade until 11 o'clock tomorrow morning. It's summertime Friday, so it'll be early in, early out. We'll do our weekly ritual, finish the week up, and head off into the weekend. I look forward to seeing you tomorrow morning in the trade room, the opening bell. If not, grab that free class, the free trial, and come back and see me again next time on the next edition of our nightly newsletter. As always, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time, all right? We'll see you next time. Adios, amigos. Bye-bye for now.